Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 14, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Today we'll look at stocks. Small caps are danger close to bear market levels. We'll give an example of a trade called Hong Kong Shanghai Banking Corporation, also known as HSBC. High-yield bonds are approaching again to vital support, and they seem to have held it, so we'll look at that. Investment-grade corporates are not really holding, and they're collapsing to new lows. Gold is taking advantage of a weaker dollar and has rallied for the week. And natural gas, as always, volatility, so not for the faint of heart, but if you like to trade natural gas, we'll look over it. And Bitcoin has broken critical support and could collapse. If you are a subscriber, then we will cover all of these stocks. So I cover mostly large caps, ETFs, and some commodities and Forex in the Elite newsletter. And also we will cover various speculative stocks in the Speculator newsletter. So if you are a subscriber, stay tuned. If you're not a subscriber, consider signing up at MasterChartsTrading.com. Looking at this chart, the chart contains 4 lines. You see green, blue, red, and yellow lines. So these are my support resistance indicator lines. They're also known as Master Charts Trading price action indicators. What they do is they help me find good entry and exit points, as well as just to determine if I want to be buying or selling. So in this case, we're looking at S&P 500, and generally speaking, I want to be buying. Now, how did I know? So we can look at S&P 500 on monthly chart. So again, you can change the indicator settings by clicking this little wheel on the settings on the on the indicator chart here and the indicator label, and then you can change the length to 12 for monthly. You can change the length to 52 for weekly, and you can keep it as 250 for daily. Anything less than daily, I usually keep as 250, but that's a different subject, so I don't want to get into it right now. Looking at S&P 500, here's a monthly chart, and you can clearly see this breakout right there in May of 2020, April-May of 2020. So this was our signal, and at that point we're saying, okay, we are now in an uptrend. We want to be buying, and then we can time our entry using the daily chart. But overall, nothing has really changed. You can see that we have not yet closed. We continue be moving up, and we have not yet closed below the yellow line. So yellow line is way down here at 38.40. So yellow line means bear market, and it has not yet occurred. So we're looking at S&P 500. It's been trading basically next to records, not really pulling back much. Looking at NASDAQ, so NASDAQ is a little bit more volatile, and you can see that it actually broke below this green support resistance line, and it's approaching now what's called strong support at the blue support resistance line. So my favorite entry opportunities occur around the blue line, and we're actually approaching that level. We're very close. We came super close on January 10th, and I think we will retest this level, so we will need to stay tuned and see what happens for NASDAQ. Small caps, so we're looking at small caps IWM, and I'm going to zoom in. You can see that we actually are very close to the yellow line. And this is not a good sign, because when we get to the yellow line, that means it's a bear market, and we're literally toying with it. So here on the 10th of January, and again today on 14th of January, we already pierced through it, but we haven't yet closed below it. So I'm looking also at Russell 2000, the actual index futures, and I think it gives a little bit better representation versus the IWM. So IWM, you can do adjusted versus unadjusted. So right there where I'm hovering, it is adjusted. You can uncheck that to make it unadjusted. So better if you're really trying to get, nitty-gritty and nitpicking, and this is better to use the futures, and this is continuous futures. So for Russell, I'm looking at this yellow line, which is currently at 2101, and if that is breached, if it breaks below it, then we will be in a bear market. This hasn't yet happened. You can look also on weekly chart, and there's the weekly chart. You can see how close we're getting to this yellow support resistance line. So approaching bearish levels, will they break down? So that's $1 million question. And also, if they break down below this yellow support resistance line, will the remainder of the market also continue with it? So the large caps, due to correlations, maybe. We'll see. Right now, we're kind of danger close, and we're just gonna play it by ear at this point and see what happens. Here I want to give an example of a trade. This is HSBC, also known as Hong Kong Shanghai Banking Corporation. I didn't know that. I always, called it HSBC. Now I looked it up. We did trade it. So this is, how simple things get and how easy it is to trade. So basically, this is what we do. We're looking for a stock that has closed above the blue line. So in this case, the breakout, the original breakout right there, occurred on the 16th of February. I mean, at that point, you could just buy it, but I just didn't like the way, the indicators kind of curved down. It means there was elevated risk. So I need to buy here, and I need to put my stop way down here at the yellow line. So I kind of waited and did nothing, and actually we were rewarded. The price did come down. We were buying it back here on 23rd of August. There was an opportunity, actual alert. Again, we put our, we buy at the blue line, put our stop at the yellow line, and then trail higher. And then there were multiple extra opportunities, so actually 4 opportunities to buy. And now we're at, new highs. So we can look at the weekly chart as well, and kind of looks even better. Some people like weekly charts. Some people actually like monthly charts. We're going to look at monthly as well. But overall, it's the same general principle. It's just you see more of the chart, more data. So same idea. We're buying on close above the blue line, but in this case, it's a weekly chart, so we're buying on Friday. So some people prefer that because basically throughout the week they do nothing and just trade one day on Friday, and that's an option, definitely. And here it is on monthly charts. So monthly charts are even, obviously much more long term, and it's not impossible to trade, but me personally, I get antsy, so it's hard for me to wait for a whole month for the candle to close and then buy. You see, so that's why I prefer to trade on daily charts. But some people are, have tons of time, and they have just lots of attention, and they can stay in this position for month on end, so they don't really care. There is opportunity. We wait for a whole month, and then we buy it on the last day of the month, of the trading months. Yes, it's possible. And then you would have been rewarded, just depending on where you entered. But on daily charts, it's easier, in my opinion. Same general principle. So we buy and close above the blue line, put our stop at the yellow line. Once our target is reached, usually around the green line, we move our stop to entry, and then continuously trail higher at the blue line itself. Now we're way up there, so you definitely, all of the alerts that were given are profitable in this case, and you can simply trail higher. So this is how we trade. If you're interested, sign up, look in the description of the video where to sign up. Okay, moving on to intermarket analysis. Here is junk debt. So junk debt, why do I give a hoot about junk debts? Here's junk debt on monthly charts. Down below here is called coefficient, correlation coefficient. Correlation means how close two things follow one another. And in this case, generally speaking, S&P 500, so this is a correlation to the S&P 500. Generally speaking, correlation of junk debt to S&P 500 is pretty good. Occasionally there are negative time periods, but by and large I would group junk debt to more related to stocks versus bonds. So junk debt is more like stocks than more like treasury bonds. So this is important to know, and we're looking at daily charts right now for junk debt. And okay, so up until very recently we can see that the lines were really far apart. So green and yellow lines were super far apart back here in September, October. Then all of a sudden they narrowed together, and here where I'm hovering right there, in late November we actually broke down below this yellow support resistance line. So to me this implies a change of trend to the downside. However, so far it's been negated right there on 27th of December with another signal to the upside. And so far the signal to the upside has actually not been negated, because so far we actually held support. We have not closed below this yellow support resistance line right there. On the 10th of January and again on the 11th of January we touched it, but we didn't close below it. So to me this means we're still holding, and with the latest signal up trend signal is still valid, so I'm keeping it for now. And generally speaking, this is a good sign, especially for stocks. So like I said, since junk debt and stocks correlate highly, I want to say that if junk doesn't break down, that's actually is a good thing for stocks. Moving on to treasuries. So treasuries did not hold, did not behave that well. Here's treasury bonds, TLT. The latest signal was to the upside, but we're so close to bearish levels right there where I'm hovering. So TLT could easily break down and just collapse, and this is the only one that's actually still holding. The 10-year treasury bonds already did that. You can see they broke down already. So we will again see what happens, but right now bonds do not look good, and it does make sense because of the way Federal Reserve is behaving. Looks like they're gonna raise the interest rates, which will be bad for bonds, generally speaking, bad for prices of bonds. So I don't have any bond positions. We got out pretty much everything and just watching it. That's the best kind of thing. You want to be outside watching, and you don't want to be inside wishing you were out. Dollar index. So we're switching now to Forex. Here's DXY. So dollar index is on an uptrend. Latest signal was right there where I'm hovering, July 13th. So we're now, since then, it was in an uptrend. We're thinking about buying, and actually up arrows here, opportunities to buy. Now, right there where I'm hovering on, actually even earlier, 31st of December, there was a close below the green line, so that's considering broken support. We obviously broke it a few days later here in January, and we moved lower. So right now the weak support at 95.6 has been broken. Now we're waiting for dollar index to continue towards the blue support resistance line. Most likely it will. It is kind of weird for it to just hang out here and then rally, but not impossible. So this is good for gold. Again, I'm gonna quickly go over why it's good for gold. So gold is traded in dollars, XAU divided by US dollar. So if the dollar is getting weaker, this lower part of the equation, it's getting smaller. That means the upper part is getting bigger, and it will pull this currency pair higher. So it seems that gold, the last signal right there, and you can see there was a lot of whipsaws, but the latest signal is bullish and it's still holding. The latest signal right there on 31st of December is bullish and it's still holding, and I'm thinking about buying, or rather I'm only thinking about buying. I'm not thinking about shorting gold and gold related. So we're already beginning to buy various gold related equities. So let's wait and see what happens. It's possible dollar will continue lower, which will help gold, obviously. And here's natural gas, and this thing is always completely wild. So latest signal for natural gas was bearish. Right there is the breakdown, 6th of December. But then you can see an enormous candle right there on 12th of December, 12th of January. And I'm writing to my subscribers, and I'm like, you know, this trade from 14th December, 6th of December, it's possible that it failed, because our stop is on close above this blue line. Okay, so let's say we're short right there. Where do we put our stop? We put our stop at the blue line. So if we close above the blue line, we will exit. In this case, it's almost $5. But you can see that here on the 12th of January, enormous rally, and then next day we just gave basically the entire thing back. What's extra cool is this chart pattern. So again, I don't really use chart patterns, but this one just kind of jumps out of you, jumps out at you. So it's kind of interesting sometimes. So number one, these two candles, 12th of January and 13th of January, are what's called an inside day pattern. So the 13th of January trading range is entirely within the previous day's trading range. Additionally, you can kind of draw a triangle. So in general, inside day is like a beginning of a triangle. So now we're watching for a breakout either way. We can break out up, or we can break down. And today, we attempted to break down below this imaginary triangle line, and so far we haven't. So we haven't closed below it. So for now, we're still kind of trading sideways basically. But what I wanted to show here is just how enormous these candles are, and how retail traders get just taken out to the woodshed. And you really need to know what you're doing, because this futures are sometimes completely wild, and you're trading using, for example, UNG, or options on UNG, or some of the leveraged or inverse leveraged ETFs, and it's quite difficult, especially with movements of this nature. So what I'm telling people is, if you don't know what you're doing, just don't trade it. Don't trade natural gas. It's one of the toughest securities to trade. And wrapping up, here's Bitcoin. So Bitcoin has broken support. This is a huge deal. At least it broken support on daily charts. Now, on weekly charts, it's not as significant. Reason being is because Bitcoin is traded 24 hours a day, so this 7 days or 5 days period is sort of irrelevant. But we can look also on a monthly chart, and we can look at monthly chart of Bitcoin. So far the signal is to the downside, but do remember today is January 14th, so there is still time. Obviously the monthly signal, if it closes below 43875, I'm reading right off the chart, that's what the red line is, 43875. So we can also look here, there it is, 43875 is the level. It broke below it already, and especially if it closes on monthly chart, that would not be a good signal at all. That would imply we're gonna go lower. And initial target is 35,000 here, but I think it could just unravel to like 8,000 easily. You know, it went from July till April from 8,000 to 60,000. So why not? Why can't it go backwards, do the same thing? I'll leave you with that thought. All right, that's it for this week's recap. Head over to MasterChartsTrading.com. One word, MasterChartsTrading.com. Click on products and sign up for one of the products. I have 3 products, trading indicators. So again, these lines on the chart, you can have them on your TradingView account. You don't have to have a paid TradingView account to use my lines. You can have free TradingView account. So sign up for a free TradingView account, then head over to MasterCharts Trading, sign up for the indicators. You get a free trial to try them out. If you want just a newsletter, so again, I'm sending out daily alerts and weekly summary emails, and that's it's called a newsletter, so you can have that. I think the best deal, of course, is the ultimate bundle, where you get both the indicators and the newsletters together. And $59.95, it's a steal. All right, that's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching, and have another great trading week. Bye-bye.